What's up, guys? Welcome to the Joy of the Trade weekly review. There wasn't a lot in the way of macro news this week in terms of massive economic numbers, no real shift in the fundamental macro backdrop. But what did happen was we had a little bit of a historic run in selling and growth in tech stocks. We had the NASDAQ down 7 days in a row, over 1% a day. That is a streak that we haven't seen since 2016. So whenever you get these historic statistical anomalies, you should expect a proportionate rebound, a proportionate reaction, but it's also an indication that these mofos aren't messing around. The bears are here to stay. They're in control until they're not. And we can expect a bull market pop, which we're getting, but that sell-off we had to have that kind of sell-off, which only happens, once every 7 years or so, happen is something that you should heed and you should pay attention to and you should respect. Okay. So that's something I really want you to understand. And so when we're looking at that, look at this sell-off we had. It was just boom, 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 boom. And then we bottomed out right around on the NASDAQ, the 12,000 level, which we bounced off before. So 12,000 is an important level now. This is a really important level. So it's going to get tested at some point. I don't know when, probably within a few weeks. But the next time they test this thing, I think we go higher for a little bit. We might get to 13,000 here, but still a downtrend, lower highs. Going to be another lower high around the 13,000 level on the NASDAQ. And then we're going to have to hold this 12,000 again, or you're going to be looking at making new lows in the NASDAQ lickety split this year. So that's something that you really have to pay attention to. And so if you're trying to time into adding tech stocks that you're missing, that you think are going to run and run and run, trade it down here from the long side. Don't chase up these moves getting long. That's how you're going to get really hurt. That's how the pain train comes to your town. So stay off the damn pain train. It's no fun. Another thing we got to pay close attention to in macro land is this interest rate pressure that's creating havoc everywhere. So this is the 10-year bond, which is at 330, which is what mortgages are based off of, which is why mortgages are back to like 6% in the 30-year. We had the largest increase in 1 year in the 30-year fixed rate mortgage interest rate since 2008. Since 2008. 08 was a terrible year. So this is not a trend we want to have continue. Look at this 30-year mortgage. Check this thing out. Okay, this is an average one. So this is just a national average that we're looking at. 611. I hope you all refinance that bad boy in the 2s or the 3s. I hope so. I hope you were active here, even if you didn't need to take any money out. Just refinancing it was the thing to do. And look, now we're at 6. So if we compare what the housing ETF has done in the same period of time, the home builders selling off. Went from 66 down to 61 here on this last leg up, but we were much higher. We were in the high 70s, and it just ain't pretty. We need this thing to calm down before we can get a real wind behind our backs in the markets. I want to see this back in the low 5s. This can't stay up here at 6% and have things be normal and have things be healthy, because that'll be the next shoe that drops in the US economy. That'll be the next shoe. But this is just a short-term thing. The Fed's going to pivot because you're going to see that NASDAQ break down below. We also had our last macro thing that I want to look at is crude, which surprised me with its weakness on the Saudi cuts. Now I say don't fade the Saudis. It's like going against the Fed. The market faded them. We put it in the bottom though, in the low 80s, and I expect this bounce back up. People who are shorting into this are going to get squeezed very hard. So just some macro things to think about. And if we look at the XLE, what it's done, as the market has obviously sold off a lot, oil market sold off, the stock market, it's held up. Not as bad It's not as bad. So people believe in the stocks. They believe this is short-lived. And I'm with the camp that believes in the stocks and believes that that sell-off in the commodity is short-lived. You get this rip back up into the mid 90s, high 90s. Guess what? XLE is going to be back up here, near all-time highs for the year. So that's what I'm playing. That's how I'm looking at it. That's what I expect over the next couple of weeks. I'll be back Monday with some macro things to look at for everybody to pay attention to, and we'll go from there. LFG guys, like this page, subscribe to Joy of the Trade. I put out this kind of content all the time. So if you're on YouTube, if you've seen this on YouTube, hit thumbs up, put a nice comment. That's the kind of stuff that motivates. So LFG guys, have a great weekend.